Everyone, and welcome to Financial Independence through Small Multifamily Investing. My name is Lawrence Slay, also known as Mr. International, located here in the Bronx, New York. I currently own 6 units here in the New York City area. I'm going to expand my and scale my business. My markets, my target markets are the Piedmont Triad area, Richmond and Norfolk, Virginia, and also look at Huntsville, Alabama. So before I'm not going to say anything no more, right? We have 2 fantastic guests tonight who's going to refresh, right, your mind on the real estate terminology, right? If you're new to investing, take notes. If you're a seasoned investor, take notes, right? Because these 2 gentlemen here are going to give you specific words that you need to use when you're talking to real estate, specifically commercial real estate brokers, right? You got to know, you got to speak the language. That's what you got to do, speak the language, right? So without further ado, I'm bringing my special guests, James Bryant and Jerome Myers.
Lawrence, I don't know what the biggest attendance you had, man. I'm just grateful that 28 people came to show up. James, we got to tell our moms to drop off now since we hit the record attendance thing.
Yeah. We can do that.
Look, I don't even know where to go. I dropped some stuff in the chat. So this is an interactive conversation, ladies and gentlemen. We're going to ask you to put things in the chat. We got 85 or so, maybe it's only 82. I haven't counted lately. Multifamily investing terms that we're going to go through. And we can make it boring as watching paint dry, or we can have some fun. So I asked a question, and the question was, well, I made a request of you. If you've ever talked to a broker, drop a 1 in the chat. If you've never talked to a broker, give me a 2. And out of the 30 people that are on, I've had 4 people participate. And it makes me feel bad because I want to make sure I understand who we're talking to. And so the majority of people, now I'm talking about a commercial real estate broker. I'm not talking about the single family broker. I want the person that actually trades buildings 5 and above. Really want to understand where we're at. Look at Dolly Garcia in the building. Okay. So I guess we should talk about who we are, James. So I'll let you go first because, you're the legend out here.
Oh, whatever. I'm just the guy whose hair got so gray he had to cut it off. That's what that was. And then in my beard, I used to have a goatee. It was getting a little bit gray. I had to cut that off too. So I just had to, start coming a little bit cleaner. But my name is James Bryant. I am a multifamily investor. I've invested in joint ventures along with Jerome. I have been investing with him since he started getting into multifamily. I have a day job. I love my life. Some people have a day job and they're trying to escape it. I have a day job. I love my life. I used to say I have a side business, but I can't say that anymore because, Jerome and I have been going back and forth. And it's, if you keep saying it's a side business, it's going to stay a side business. So I don't want it to stay a side business. I have a growing leadership training and coaching firm, Better You for You. I focus on really helping engineers and people with an engineering and technical background to personally develop, to grow in their leadership capacity, and to become better communicators. We use a 4-step process called the Engineer's Blueprint for a Balanced Life, really because I believe that you can, work your job or create the business of your dreams, as well as have a life that you love and that you're proud of. And I help people do that. So Jerome and I have been doing this real estate thing, and we just started doing the course, Jerome, coming up with how can we make these things a little bit more interactive. Instead of just going through 85 terms, how can we bring a little bit of ourselves into the interaction? And that's where, if the people who have taken the Myers Methods course, put a 3 in the chat box.
We all laughing.
All right. 3. Okay. All right. So for those of you that are there, I'm about to bring them out. I'm about to bring them out.
Jimbo
Hey, what's going
is
on,
here.
man? What's going on, man? How you doing?
I'm
That's
here,
wrong.
brother. I am here. It's good to see you. It's been a while, man.
Oh
We
man,
stopped
it's
doing
been
the
good to
course.
see you too, man. So what we got cooking up today?
Look, man, I wanted to get on the line with you and talk a little bit about these deals you've been sending out. I know a lot of people out there are scared to call a multifamily broker. They're
come on,
interested
man.
in deals, but they just don't know what to say when they get on the line with you. So
Now I tell you what, you don't want to be on the line when you don't know what you're talking about. That's crazy.
Well,
Because,
I think
you know,
a lot of people struggle with that, right? They don't know what to say. And so you sent out this deal, and Lawrence and I talked about it today on the coaching call. And I was asking him, I said, Lawrence, what's the market rent on this property? And he was going through and he's like, man, it looks like it's 840, but this one is only written at 745. So it looks like we got an opportunity. I said, yeah. And then he was talking about the MSA. He said, Thomasville is kind of close to Charlotte, but it's kind of close to Greensboro and Winston-Salem. And they reference Winston-Salem in the offer memorandum. So I don't really know which MSA it's in. I said, man, look, what are we going to do about that? And so you sent that out. What MSA is it in?
Oh man, that's listen, between you and me, it ain't there any of those MSAs that's actually. I just had the one that I can get the most money from, the one that I can say is going to generate the most rent, but it's really a little bit closer to that Winston-Salem area.
Well, is Winston-Salem the submarket on this one, or I mean, what is going on? I don't even know where.
It's a submarket. You know, we're still in that triad area, but that's more of a submarket, man. And look, don't tell your friends I'm telling you this, okay?
Well, I know the Charlotte MSA trades at a higher price than the one in Greensboro. But the big question here is, like, what class is this property? It was built in like 1969, if I'm not mistaken. And does Thomasville even have neighborhoods? Like, is this a B or a C? Is it a D?
So are you guys really interested in buying this?
Am I interested in buying it?
Yeah.
Yeah, of course. I mean, the subject property looks amazing.
So what kind of offer are you talking about? Where your ballpark at? What you thinking? Because if you're too low, we can just go ahead and end this conversation right now.
Well, I don't have a ballpark. I'm trying to get all the data from you, Jimbo. Man,
I sent the data already. The data
you sent the
is in the
memorandum.
offering memorandum. Man, everything in there is like the Bible. It's absolutely supposed to be what it is, man.
Jimbo, I went through the P&L that you sent over, and I can tell you that it's not exactly what it is. I started to try to do some underwriting, and I got stuck, right?
Why'd you get stuck?
Because
the numbers start looking too good, and you start looking at how much money you're going to be able to make, and you got so happy, you got stuck, man. Come on, give me a big offer. Come on, man.
I'll give you a big offer, but you can't tell me the taxes on a $3 million building are $4,000.
Why not, man?
It was $14,000 last year.
Well, that was last year. We got a special deal that's coming up, and that's what I have in that offer memorandum, man. It's not always about what it is; it's about what it can be.
What it can be. So you want me to pay them for a business plan that they did not exit, or they did not complete their business plan and exit?
They were able to execute it, man. Just on 10% of the units.
How you figure?
They were able to execute it on 10% of the units.
On 10% of the units.
So they showed proof of concept. So you can take that concept and you apply that to the whole property.
But
come on, man.
I don't even know what to call it. Is it a value add deal? Is it distress? Like, what is it?
It's all value for you. That's what it's called. Value for you. I'm trying to give you a deal. This is a deal. But you know what? If you don't want it, that's fine. I got other people that I can talk to.
I understand. There's a ton of apartment syndicators out there. And, when we come through, we're going to close. Now, those apartment syndicators get out there and they start trying to raise some money and they find out pretty quick.
Syndicators? I thought you was Mr. Joint Venture.
I am. That's what I said.
Start doing something different?
No, you said that there's a bunch of other people who want it. And I'm telling you that there are all these apartment syndicators that are out there.
Man.
will come to you and tell you that they can close the deal. And they ain't got no money because they go raise the money and they realize they don't have a network that's actually going to take care of them.
Well, look, those are not the people that I deal with.
Yeah, okay. You ain't never had a deal come out of contract? That's what you're telling me?
Oh, absolutely not, man.
Okay.
Absolutely not. The only ones that come out of contract are the ones that we look at and they just ain't, it wasn't good enough for my owner. It wasn't good enough.
What?
Yeah.
Okay. So look, all right. So look, man, you know, I'm an active investor. I'm involved in finding, qualifying, and closing these real estate transactions. I when I do my taxes this year, I'm gonna be a real estate professional, right?
That's
so
right.
I'm gonna get to offset those losses against my active income. And when I come through on all of that, you know, I'm gonna be the general partner on this deal. But I'm not doing the syndication, right? And I know the syndicators, they talk about general partners and sponsors and all that stuff. They tell people to put their money in as a passive investment and they can be an LP or a limited partner. We're not doing all that, man. I'm going to go in and do this deal with a group of my friends, and most of them are going to be sophisticated investors. So, you know, they may not make over $250,000 a year. They may not be millionaires outside of their own home, but that's okay. We don't need accredited investors to do these joint ventures.
Okay. And so all those people that you're talking about, they're going to be active on the deal.
Yeah, of course. They're going to have a role. They're going to have a role.
They're going to have a role on the deal. Okay.
Absolutely.
Okay. So what kind of roles are they going to be playing?
Man, listen, we got due diligence going. We got to manage the property manager. We got to work on this construction. You said they executed 10% of their business plan.
That's right. They executed it 10%. It worked great.
Look, we're going to have to do 30 renovations if we're going to get through this thing. I mean, I could go on and on.
I mean, we leaving a lot of meat on the bone for you.
Yeah, it sounds like you guys aren't getting the rent that you thought you were going to get on the backside, and you're trying to get out, and you want me to pay for it.
No. That is not the case. I would never put anything like that on the market. No, that's not the case, man. Come on, man.
I watched the last deal that you did trade. I watched the last deal that you did trade, and
come on.
I talked to the operator.
Listen,
I talked to the operator.
And
he called me. I told him not to buy it. He bought it anyway, and he's pretty upset right now. He said he never buy another deal from you, Jimbo.
I don't know why he said that. It's not my fault. He's not able to execute his business plan. It wasn't what we got. In fact, I'm glad you told me that because I'll reach out to him now and see if I can get the property from him, and then get with some people who can actually make that property work.
Jimbo,
you got to make it work.
Jimbo,
hey, Jerome,
he is not going to
share your screen, Jerome. You can share your screen.
Am I not sharing the slide?
No, you're sharing the screen. No.
Oh, you mean we're able to see?
You're able to see the slides when he's
going to see it, but if you want it to be big, you got to share it.
Your website again? Something Properties.
BRI, BRI.
You got just screen that.
You know what? Yeah.
Like we can
what
see
you might need to
when
do is change it to speaker view. If Jerome is fine, if you put it on speaker view when Jerome speaks, that slide will come up.
All right. So we getting back into it, Jimbo. Listen, I'm gonna set this thing up in a way where my partners are gonna get a little piece of the acquisition fee. Well, I'm not telling the truth. I'm gonna take the whole acquisition fee, brother.
Okay.
I'm gonna take the whole acquisition fee.
At least you're being honest. Now,
I am.
I know some deals in the past where I don't think you took all the fee that you supposed to take.
I left it in the deal. I wanted to make sure we were in a good position, man. You ain't supposed to do that, but I did it. So listen, I'm gonna take all the acquisition fee on this one, and I'm gonna take some asset management fee because I found the deal. This is part of the reason why we don't use a broker, right? Because if we had another broker,
another broker. I'm about to say because I am a broker. So I hope you're okay with.
Well, you have the listing, Jimbo.
I know that.
I'm talking about on the buy side.
Okay.
I don't want to pay a buy side broker 3% on the deal when I can put that in my acquisition fee.
Hey,
and not hurt it.
Jerome.
Yes, sir.
I think somebody got their hand up. Somebody want to say something. Interjected. They eavesdropping in on our conversations or something. I don't know what's going on.
What in the world?
I'm taking notes, man. This is great, the back and forth. But I just had a quick question on asset management fee. I've seen it done two ways. What you have here is the 2% of effective gross income. And I've also seen like a 1% fee of the total investors' contribution. So can you speak to one or the other, why you chose this way versus the 1% of funds received?
I've never heard of asset management. Well, okay. So if a broker dealer is doing the deal, then they're charging a placement fee. And so that's why you're seeing place capital. For the actual operator, they don't see that, right? Once the money's in the deal, the money's in the deal. Asset management fee is typically tied to the ongoing operations of the property. So that's why you see a gross revenue number.
If I hired a financial advisor to invest my money in stocks and bonds and such, typically that fee is 1% of the total sum of my assets.
Yeah,
that's what I was referring to.
Yeah, and so when I say broker dealer, same thing as a financial advisor. Usually, well, depending on if they're a captive agent or not, those folks won't do private placement outside of the stock market. They won't do IPOs. Well, it depends on your net worth. When I had money at Morgan Stanley, if you had a certain amount in your account, then they did give you access to private offerings. But all of these real estate opportunities are going to be private placements. So they will usually tack on a fee associated with that. Okay. That would be the 1% that you just mentioned on the total money that goes into the deal.
Okay, but all right. Okay.
Go ahead.
No,
keep going. You're not certain. Keep going, please.
Yeah.
No, so I was looking at a deal and the asset management fee. This is a multifamily syndication. The asset management fee, as it's described here, was not 2% of the effective gross income. It was 1% of, let's say it's a $10 million deal that you put 25% down there. So there's $2.5 million raised for the deal. The asset management fee would be 1% of that. Similar to the broker situation. So.
Yes. Were you going direct to the sponsor or were you going?
Yeah, no, this is direct to the sponsor.
Fund to fund.
No, this is just direct. Yeah.
Yeah, that's the first time that I've seen that, because usually what happens is there is a person placing the capital in, and because they're not operating the deal, they're trying to figure out how they're going to get paid on the transaction. So I've never seen people do it that way. So you'll see syndicators bring in people who have their brokerage license to go source capital, or you'll see syndicators partner with co-GPs who are helping with investor relations, and they're getting paid based on the amount of money that flows through their entity. There's no reason for a general partner to charge the people who put money in the deal, because they're going to get an acquisition fee on the appraised value of the asset. Right. They're also going to get an ongoing fee for running the property. That's an asset management fee. So usually there's some intermediary that's getting paid for bringing your capital to the deal. I haven't seen it.
Unless they're a broker dealer, you're not allowed to do that. Right? That's what I understand. I'm not
I don't work for, I'm not an attorney. Okay. I don't work for the SEC.
Don't either.
But I do encourage, when we're teaching our course, I do encourage people not to raise money early on, because most people are doing it illegally.
Okay.
They are illegally selling securities, and if the deal goes bad, then people will probably be interested in suing them. And so I encourage people to stay out of that risky position until they are very clear about what they're doing. They're maybe running their own deal. And so when they raise that money, they feel comfortable in the situation.
Yeah. Cool.
Jimbo.
Hey, man.
All right. So this guarantee fee. Now, look, man, Jimbo.
Yeah.
There are people there are brokers who are willing to roll their commission into the deal, brother. And I know that you've been in this game a long time. So look, if you want to come into this deal, guarantee this loan with me, roll your fee in, we can make it really, really, really worth your time.
No, I'm not going to be able to do that, man.
All right.
I'm not going to be able to do that.
Worth trying.
But if you on a project where I'm not representing the seller, we might be able to work something out.
All right. Well, I know where your allegiance lies. The guy who's writing your check is the guy you're loyal to. I got it.
Yeah.
So that means you're not going to do me any favors on this deal, which is fine.
Oh, that ain't
So,
true, man. I done did you a favor, man. I gave you the pro forma. I put all that great information in there.
Jumbo.
I put out the numbers of exactly how you're gonna be able to make the money. They already proved it in the 10% that they did. Come on, man.
Yeah, if it was so good, they wouldn't be selling it right now, brother. I know it. So look, there's going to be opportunity to refinance this deal. And
How long you plan on holding it?
I don't know how long I'm gonna hold it. I mean, would you be upset? I know you said you out on this deal, but let's say I could refinance it in year 4. I could give you all your money back and I could keep going. Would you be upset if I just held on to the deal if I gave you all your original investment back through a refi?
And
Wait a
minute.
Yeah. Come on.
So
What?
are you saying that at the end of year 4 you're gonna give me my money back? But
I'm gonna give it all back
the
to you,
deal?
Jimbo.
Am I still in the
I'm gonna
deal,
leave you
or
in
am
the
I
deal.
out?
Look, you took the risk where we went in and we finished this business plan. I don't think it's fair for me to refinance you out of the deal. I'm gonna keep you in the deal, brother.
Listen. I'm just making sure, bro, because sometimes you get with some of these people and they refinance and they'll
Yeah.
refinance you out the deal, and so you got to make sure that
look.
you're looking at that paperwork so that you still in the deal when they when they go through and do that refinance.
Look, well, I mean, I'm not giving you a pref, right? You're not getting guaranteed returns.
No
You're not getting your 8 pref.
waterfall. I'm not gonna get no waterfall.
I'm not going through the waterfalls. You're going to
Come
get
on,
what
man.
I get. Okay. All right. And then, there's one more fee that's going to be involved in this deal. And I saw it on your pro forma. And I don't know how you can get a little asset with 33 units,
Yeah.
have a 7% property management fee in the middle of nowhere. How'd y'all do that?
Oh, we got people here. We got people here that can do that.
Yeah. All right. Whatever.
We got a great team of people. If you're interested in meeting that team of people, I might be able to work something out for you.
Could you hook me up with a property manager in the market that focuses on this type of asset?
That focuses on that type of asset, and that focuses on that particular asset. If you want, man,
they can give me rent comps and everything.
they can give you everything you want. They can tell you exactly how that 10% reno went and how well it went, and they can just tell you how well it's going to go through all the rest of them units. I'm telling you, man, there's a lot of meat on the bone on this one. You don't want to miss out.
Wait, Jimbo, listen. I looked through the thing today, and y'all got $6,500 in there for renovations on units that are almost 1,000 square feet.
Mm-hmm.
Can you introduce me to the property manager that can get that done for me in this market? I can't even find workers at my other properties.
Yeah,
and you talking about
he's the property
$6,500?
manager, the plumber, the general contractor, the handyman. He do the loan. Him and his family, they do the loan, man. You got to come see it. You just got to absolutely come see it.
It's a one-man show, baby. All right, so Jimbo, do you have the leases?
Yeah.
You do?
I have every last one of them
Okay. Well, is there any way you
for
can
that
send them over?
10%.
Do they have security deposits or anything over there?
Yeah, but
You don't sound sure,
wait
brother.
a minute. Here's the deal.
Yeah.
This particular owner owns several different properties,
Uh-huh.
and so it's going to be hard to get you the clean financial information that you need.
Clean.
because it's all kind of mixed in.
Stuff like spaghetti.
yeah, it's all kind of mixed in, man. So you know how that is, man.
Yeah, it's
No,
just like gumbo, man. That's fine. Just like you can't give me clean trailing 12. You can't give me a good T12, that profit and loss statement. It looked a little messy today.
No, man. If you look at the pro forma, cleans
But I'm
up
asking about the
everything.
actuals, Jimbo. I don't care about your pro forma. I don't ever look
on,
at the
man.
pro forma, man.
You mean to tell me you ain't gonna buy it on the pro forma?
I'm gonna use.
You don't trust me?
I absolutely trust you, but I gotta trust but verify if I'm gonna put a few $1 million into this deal, man.
I mean, we are here on the ground, and you don't trust me.
I do trust you, Jimbo. What are you talking about?
Goodness.
I'm just telling you that I buy based on actuals, and so on the actuals, I need a nice clean T12, right? I want to see the profit and loss statement for the last 12 months.
I will see what I can do with that, but I'm a little put out. I'm just gonna let you know.
That's fine, and I understand that. When you get your check at closing, you're gonna be just fine because we're gonna close this one the first go around. So listen, I got a letter.
You gonna close it the first go around?
Absolutely. You know we always close.
Oh yeah, I'll get you that T12. I'll get you that clean information that you need.
That's what I'm talking about, Jimbo. All right, so I'm gonna send over a letter of intent.
Okay.
After you send me that information, you just promise me.
Well, wait a minute. You just give me the letter of intent, and I'll give you the information.
Well, you don't want my letter of intent without the information, Jimbo. I need the information so I can do my underwriting. We talked about this now.
The underwriting can be based on the pro forma.
Jimbo, can you tell me about these rent comps? Why are you telling me there's still meat on the bone? And when I look at the rent comps that you put in the package, in the operating memorandum or offering memorandum, why are we at the top of the list? Why do we have the highest rents out of all of the comps that you picked? What's going on there?
Oh, I'm just letting you see that you the cream of the crop, man. So you are leading the market. You are leading the way. You are absolutely leading the way, man. Come on.
But I don't own the property yet. I don't want to leave the band when I come in.
I'm giving you a picture of what it will be.
Okay. So look, the part of the reason why I can buy this deal is because I'm not doing a syndication. So I don't got to pay for a private placement memorandum, them PPPMs and all these other acronyms, but I will have an operating agreement and the subscription agreement where people sign up and agree to the terms of our offering. Yeah, I don't need one of those either, but I will use the operating agreement. Now, Jimbo, do you have a good business attorney that can help me put that together?
Yeah.
I
do.
Who?
Oh, you know what? It's Billy Bob. Billy Bob is over there not too far from the one-man show that does the property management. But Billy Bob is the lawyer and the town commissioner as well. Yeah,
they share an office, don't they?
Yeah.
All right. Well, I mean,
but he can hook you up.
I guess he can get it through. I don't think I'm going to use Billy Bob, Jimbo. All right. So, look, the rent roll.
What about the rent roll?
You said it was 100%.
I rolled the rent over what I gave you. I rolled it to you.
You said it's 100% occupied, but it's vacant units. What are you doing?
What are you talking about? There ain't no vacant units.
Well, that's what the rent roll says.
Oh, you know what? There's people in them units. But you know how we had that moratorium on evictions and we're doing some things. So they a little backed up on giving them rents, but they still there. So they occupied.
Are they?
They are physically occupied.
Yeah, I understand. And, I'm glad you said that because I really only worry about economic occupancy. But look, so I did the math and it looked like you got rents at like $745, but you collected $690 per unit per month. So that looks like there's about a 10% vacancy, but the pro forma said that I should use 5%. So can you explain to me why the actual vacancy?
How I got there? So we did the 10% of those units. We did the rent bump on those 10% units, and what you see is that projection of what that rent bump will be for those other units.
Jimbo, you talking too fast. I don't understand what you're telling me.
Come on, man.
I just want to know: is the effective gross income based on $745 or $695?
Let me.
You know what? Don't worry about it. Don't worry about that. Don't worry about it. Hey, look, I went to the rent roll. And you guys did not have any delinquency balances on there. So how many of these people that you were just talking about that haven't been evicted for COVID have bad debt on their account?
It ain't bad debt. It's good because it's going to be coming into us, right? It's good.
Listen, Jimbo, I don't know what you were talking about, brother, but here's what I know. I need to know how much of this money, how many people I'm going to have to evict day one. That's what I want to know before I get into this thing. These properties are like wild animals. I get in. I don't know who's staying. I don't know who's going. I don't know who's going to squat. I don't know any of that. But I do know if somebody owes you money, they probably not going to pay me when I come in. They're not going to say, oh, the new sheriff in town, here's my rent money. They're going to say, let me see how long I can ride this sucker out.
No, man, they ain't gonna think you no sucker. Mm-mm.
I don't know, Jimbo. I've been around the block a few times. So I looked at the pro forma.
Mm-hmm.
You didn't do a break even occupancy.
Because it's full.
Because it's full.
Because it's full.
And I guess you're going to guarantee that I make a cash flow and I'll be able to do distributions in month 1 too, huh?
Hey, look, that's your business plan. I'm just telling you what it's going. Listen, I'm just telling you what it's going to be.
What are you telling me? It's full with 10% vacancy, and we don't even know what the bad debt is. So what are you saying?
It's a deal.
All right, Jimbo, what's the gross potential income on this property, man? Because I don't know what I can't tell based on the rent roll. The rent roll say one thing, the pro forma say something else, the trailer 12 say something else. What are we doing?
We going on my word. My word is bond, man. Come on.
You don't even own the property.
But I'm representing the property. Okay. So what you want to do? I'm gonna go ahead and pull up the
I give up. Just tell me what the loss to lease is. How much is the difference between what they're renting for today and market rent? How much is that per property or for the whole property? Can you give me that?
Well, it's per unit is $75
per unit.
per unit.
Well, why did you tell me market rent is $845 and average rents are $745? How do you get to 75? So really, you're telling me it's only 810 then?
That must have
None of
been
your
a typo
comps
that
actually
my
say
that must
810.
have been a typo that my assistant put in to the numbers.
Okay. All right. So are we coming up with this asking price based on the net operating income, that NOI?
Yeah. Mm-hmm.
What NOI? Your pro forma NOI or the actual NOI?
Of course, the pro forma NOI.
But they never got that NOI.
But that's what you can get.
But there's like a $50,000 difference, brother.
But that's what you can get.
Is this a 7 cap property or a 10 cap property? I mean, what are we doing? How are we coming up with these
Man, I'm
numbers?
gonna tell you what, the owner wanted to go with the 4 cap, but I was like, no. We ain't gonna be able to do.
There ain't a 4 cap. I can promise you, there ain't a 4 cap property in Thomasville, brother.
We ain't gonna be able to do 4 cap.
All right, so it sounds like hocus pocus the way you're making up this valuation. What is this going to appraise even if I go down this path? Because the number that you talking, what are they going to say is the cap rate and the NOI for this property?
What is happening?
I guess we keep going. Jimbo, I'm waiting for you to answer my question, brother. Is it going to appraise?
Yeah, it's going to appraise, man.
Based on what?
On Sally Sue. Sally Sue is on the other side of Billy Bob, and we're going to be able to make sure we get you appraised. Yeah. Mm-hmm.
Good night. It's all inside job here. All right. So me and my buddies in this joint venture, we've already funded our operating account, man. We're ready to rock and roll. I just need to get this thing under contract at a reasonable number. At a reasonable number, Jimbo. So
you need to make sure that you get what you need to get.
What?
What you need to get from me?
I need you to give me a realistic cap rate and the real NOI, because I'm telling you that $10,000 that is the difference on the taxes. Mm-hmm. If this is a 10 cap, that's $100,000 of valuation. Mm-hmm. But you saying, what is the cap rate? You know, don't worry about it, Jimbo. I'll do some research, figure out what a reasonable cap rate is for Thomasville, man. All right, look. So physical occupancy, you said it's 100%, right?
Yeah.
So it's totally full.
Absolutely.
It's been greater than 90 for 90 days.
Yes.
All right, now it's over $1 million in the loan proceeds. So I'm gonna go ahead and try to get me a
agency loan.
I'm gonna get me an agency loan. I'm gonna skip out on the bridge financing. I don't like those types of loans anyways. And then from there, I am gonna get some debt. My debt service coverage ratio is gonna be like 1.25, maybe 1.3. Mm-hmm. And, the debt service is going to be the payment that we make to the bank each month, right? But that economic occupancy rate is the one I'm scared of.
Yeah, man. All right, I'll go do some digging and get you a little bit better date on that.
Will you?
I'll go back to the owner, even though they got some spaghetti books. I'll go back to the
it's all
owner.
mixed up like gumbo. Say it again, man.
Yeah, they got some spaghetti books, but we're gonna get it straight for you, because I know that if we go with you, you're gonna close.
I close every time, man. You talked about your word being my bond. My word is my bond. If I write this LOI, we get this thing in a purchase sell agreement. I tell you what, you're going to get your payday.
I know.
Is that what you want?
I know.
Okay.
I know.
So I keep asking you about this cap rate. You keep ignoring me. I'm going to go do my own research. Maybe I go to CoStar or something, get the cap rate. These financing fees, man, these lenders getting tough, man. They want over 1%. Some of them want 2%,
Yeah, you might to look at your network. I can't do nothing for you on that one.
All right, so listen. Now, sometimes these guys get these agency loans because the interest rates are low, and then they try to sell it, and then they realize when they tell their bank they're gonna get out of the deal that they got a prepayment penalty.
Did you hear that? Clink, 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 clink. Did you hear that?
What's that?
Clink, clink. That's them handcuffs. The handcuffs them to that loan.
Listen, I'm not paying a prepayment penalty if these guys realize that they got the wrong loan product on their deal now. Are you sure they got the right financing so they can exit?
They got the right financing, because I don't mess with no clink on this one. I'm telling you.
Jimbo. Don't have me go spend money on due diligence and buy bank fees, and then these guys talking some nonsense now.
Listen, man, I got you covered, because I want this to close too.
Did you talk to them about what type of debt they have on the property? Let me open up my system and see what type of loan they got.
Yeah, go ahead and see, man, because we need to close, because I'm supposed to be going down to St. Lucia pretty soon. So I need
that extraction event. I heard about them people going down there, man. Yeah, I tell you what, they gonna be talking about some stuff. I can't wait to see them. Anyway, so look, financing, right? I got some people who gonna put some equity in the deal. They're gonna bring some, I call it risk capital, right? They're gonna take care of that down payment. The bank's gonna bring 70 or 80% of the money. And the big thing that I'm worried about, I keep asking you if it's gonna appraise. So that loan to cost for this type of deal in this tertiary market, I'm not sure we'll be able to get much more than 75%. So, listen, it's got to appraise, right? Because I talked to a man the other day, Jimbo. Jimbo.
What happened?
I talked to a man the other day, and he told me, no, I was listening to a podcast. His appraiser shorted him, and he ended up $1 million short 48 hours before closing. 48 hours before closing. Guess what he did?
If he like you, he closed.
He reached down in that pocket, wired the money, brother. He reached down that pocket and got it done. So listen, this is why it's so important that I understand the loan to cost. The appraiser has to come in right? When he does that LTV on the backside. Now, everything that I bought to date has appraised greater than what my contract price is. And, we in this COVID environment, I don't know if we have true price discovery yet. So this might be my first deal in COVID. I don't know, man. Look, they're going to give me some interest only time on this loan. Allow us to get some of that meat off the bone he promised me is there.
Yeah, you got to get it. Get it while it's there.
Have you looked at any deals lately? Do you know what their interest rates have been on them?
Yeah, man. The interest rates, they used to be in the mid 3s. Now it's been going up to 4.5, and I'm seeing things in the 6.5. Coming through.
6.5. Woo.
Things are happening, man. Things are kind of moving up with the market and inflation and all this other stuff that's going on, man.
So is that based on LIBOR or what's going on?
It's based on what comes through my desk. I don't know what the rate's based on, man. What, you think I'm an economist? I don't know.
I love it, man. I love it. What comes on your desk? Look, man, we already talked about this agency loan. We're going to get this thing done. I'm probably do a 10 years so I can get 3 years of interest only, man. So, oh man, I'm scared to do this recourse loan, but no, we ain't gonna have to do it. We be able to do non-recourse. Right?
Yeah.
If we default, we won't have to do anything because of the size of this deal.
How would you default, man? I done told you I'm setting everything up for you.
Yeah,
Everything
all right,
will
including
work
the
right.
property manager who does everything. All I need for him to do is get sick, and then my whole property is going down the drain.
Man, he
So
done
look.
been vaccinated. Come on.
So look, yield maintenance, right?
He
Your
does
people
the
have-
maintenance. He does the maintenance, yeah.
Do your people have yield maintenance on their loan?
Yard maintenance?
Yield maintenance. Do they have yield maintenance on their loan?
No yield maintenance.
So they're not going to come back. Jimbo, I can't emphasize this enough. We talked about this a few minutes ago. I'm coming back. I'm using a different word to describe something similar.
I know you was trying to confuse me. I thought you were talking about yard maintenance for a little bit. Then you start talking about yield maintenance. Now I understand what you're saying. No, I already told you ain't no prepayment penalty.
It's different. Prepayment penalty is different from yield maintenance.
Whatever. You got to pay some fees. If you pay the thing early, you got to pay some fees, right?
Sometimes, depending on the type of loan you have, that's what I'm asking you. Do you understand what your clients have?
I understand that they don't have to pay no extra. No extra. If they sell it, they don't have to pay no extra. That's what I understand.
Okay, brother. All right. So, we go into these deals and we're looking for an equity multiple at, I don't know, maybe 3, 4. Gross rent multiplier around 9. This doesn't hit that, not even based on your pro forma, but I'm going to let it go. How much is the price per unit on this deal, man? You
Get
don't
your
know.
calculator
You don't
and
know.
price it out.
Well,
It's
I mean,
everything in the pro forma.
I'm trying to get you to give me a
Listen,
different
I'm just
number.
like
than,
any other broker. I put the pro forma together. The pro forma is great. Use that pro forma.
All right, man. Well, okay. How much the vacancy rate again?
Gee whiz, man. I told you that it's 100% physically occupied.
I asked about the vacancy rate. I didn't
Ain't
ask
no
about
vacancies.
the occupancy. Ain't
Ain't
no
no
vacancies.
vacancies.
So that means 0,
0.
full and accounted for. Okay. All right. So, Jimbo, I'm putting this LOI that they're going to take care of the closing costs. I want the seller to take care of the closing costs.
We're going to have to see about that one.
All right. So if they come back on this nonsense towards the end of this thing and they find out they got yield maintenance or some type of prepayment penalty, I'm going to be asking for all of my closing costs. I want the origination fee at the bank. I want the application fee at the bank. I want all of the attorney fees.
You don't want no deal. You don't want to. I thought you want to close this thing.
I want to close it, but I need to protect myself now.
I don't listen. I'm gonna tell you, it's gonna be a hard sell for that one.
Jimbo, is there any deferred maintenance of the property?
The property is pristine.
Okay. So once we go through and do our due diligence, will the report give us anything that we need to do?
Yeah, it'll tell you to keep doing what we've been doing because we've been doing excellent.
All right. Now, I'm going to ask for some concessions. I don't want you to say I'm retrading. I don't want to hear any of that. What I want to hear is that, yes, sir, we have some deferred maintenance and we're willing to give you a concession because we didn't take care of our property the way that we should have.
Oh, you ain't gonna hear that from me. But I understand what you're saying.
Okay, well, fine. We're going to go ahead and throw this money in earnest. So typically when we send that LOI, as soon as you sign that purchase contract, we'll fund the earnest money.
Yeah.
Then we're going to get these appraisals going within the first week, assuming you give us all the information. So as soon as we get all the information requesting the purchase and sell agreement, we're going to go ahead and make an application with the bank so they get that appraisal going. That thing's taking 4 to 6 weeks to right around this time. We're also going to get a property condition assessment or a due diligence report, and we're going to go ahead I mean, those things are going to cost us some money. So once we start spending that type of stuff, you know that we are all the way in on this thing, right?
Yeah.
Okay.
I got you.
All right. So
because you close. So
I
you want me to
close.
trust your word, but you won't trust mine.
I can't. I
And
don't
my
have
word's
a,
already on paper on the pro forma, but that's cool. We
Jimbo,
had history. We got history. Though.
Jimbo. You can go look for all. You can go look at every contract that I wrote. You'll find one that I haven't closed, brother. I close every time. So look, you're telling me there's meat on the bone. So that's slang for we can get some appreciation out of this asset, right?
Mm-hmm.
Okay. And so are we gonna have to make some capital expenditures?
Not anytime soon.
How am I going to raise the rent without doing any capital expenditures? You don't think I need a CapEx budget?
Dude, I thought that you were one of those guys that just say I'm going to raise the rent because it's a new sheriff in town.
New sheriff in town. I'm going to show up in my boots and my hat. Here we go.
I ain't
Got
doing
some
nothing.
Spurs.
I ain't going to do nothing to the property, but just raise the rent. You ain't like that?
I prefer to add a little bit of value to the communities that I own, but that's okay. We're going to get this thing. We're going to get some depreciation for these taxes for 2022.
Mm-hmm.
Can you do RUBS? Can you do ratio utility billing system in North Carolina?
No, man.
Do I pay any of those utilities?
Right now it's set up where you would pay the water.
Well, Jimbo, why did you put $400 in for utilities for the year if I'm paying water? Because that's $40 per unit per month at the minimum.
Yeah, that's the water for the washer and dryer in the common area.
All right, man. Okay, so the rent premium that you put on the pro forma is how much?
You got the pro forma, right?
I just want to see if you know your deal.
Okay.
All right. So sales proceeds. Hey, I don't know. You think these guys would want to stay in the deal with some of their money?
No, man, they looking to get out, man. They're two partners and they're having a go at it. They kind of need to go ahead and dissolve that partnership because things ain't quite going well. So they, Jimbo step in and help them do what they need to do so that they can go ahead and live their happy life. And so we're going to make sure we get that done.
All right. So their sales proceeds are going to go in their pocket. They don't want to roll into a new deal.
Nope.
What was their plan on the whole period for this project? Do you remember?
I don't remember. I wasn't around. I didn't sell it to them.
Yeah.
So I'm not sure. I'm just coming in at this point.
I always get leery. Jimbo, I always get leery when somebody only holds a property for 2 years. It usually means something showed up that they didn't account for in their assumptions. So we'll dig into that some more during due diligence. So cash on cash returns, your pro forma said we're going to get 1.3% cash on cash. And you're telling me it's an amazing deal, right?
Yeah. Amazing.
Yeah, that sounds awful. We typically target something in the neighborhood of 15%. So
15% cash on cash.
Yeah. So we're going to have to, I'm just letting you know that, we're probably going to come in a little bit lower than what you asked us to come in.
And what's
at.
your normal internal rate of return when you're putting together, your information for your investors?
Now, Jimbo, well, I don't have investors. I have partners on my deals.
Excuse me.
Yeah.
I'm sorry for
the words are important. I don't want anybody out here thinking I'm selling a security. But
really, this isn't one of them syndications. It's not a syndication.
No, sir. This is a joint venture.
That's right.
There is no preferred return in ours. Everybody gets the same.
That's right.
We
no
don't give
preferred
preferential
return.
treatment.
No waterfall.
None of that fancy stuff. We keeping it real simple.
Just
brother.
an extraction. Okay.
All right. So, as we get down here, the one thing that I noticed was that of the 33 units, only 32 are in service. And so it looks like y'all have a model unit at that property. Is that right?
No, that one's been used. That was used as an office.
Oh, even worse.
That maintenance man that I was talking about, the one that does everything.
Yeah.
That's part of the deal that we had with him.
So is it an office or is it an employee unit?
It's his office. It's his office.
Okay, but he lives upstairs because
it's his home office. It's his home office.
There you have it, ladies and gentlemen. 82 words that people use while they're talking about multifamily properties, man. I wonder how many people are like, I don't have any idea what they are talking about.
That was dope.
That's awesome.
Hutch.
What's up, big brother?
How
That
are you?
was freaking amazing. That syndication stuff got me, bro. That was funny.
Questions. I mean, I know we went over time. I'm sorry, Lawrence. Once we get in character, man, it's time to rock and roll.
And for those of y'all who haven't taken the course, every time we do something like this, it's off the cuff, right? So Jerome and I haven't talked, and we haven't said we need to do this. We just go.
Oh man.
Now, you know, that hits close to home for me with this deal that I got going on. Oh, I was like, and his name is Billy too, and he's doing all this same mess. Ain't giving me no numbers. I'm like, dude, you told me this number. The rent rolls don't match up to it. Like, what are you doing? So this was awesome.
He's doing what he's supposed to do, trying to sell a property, trying to get you to buy the property.
Well,
on nothing, on paper.
Seller. Yep.
Total air.
Listen, anybody have any questions? I just want to say this is the most intriguing, funny presentation I've ever seen. It's like it captivated me. I'm like, that's not. It's like everything's explained in this whole presentation. Everything's explained in this whole presentation. Thank you, Jerome and James.
Another question.
Jimbo, Mr. Broker. You know what, James? I trust you. Your word is your bond. I know that.
I'm not buying anything from that guy.
Did somebody say they had a question?
Hutch had something,
Oh, yeah.
I think. Go ahead, Hutch.
So, what kind of relationship do you believe you need to have with a broker to be able to carry on a conversation, challenging information that they presented to buyers?
I wouldn't challenge a broker like that. For us, it was just comedy here. But with that said, if somebody puts something in there that you just don't understand, you have to be courageous enough to really ask the question. Because as soon as you start making assumptions that you don't have to make, then you end up in a really bad spot on the backside because you are going to close the deal. And so we either do one or two things. We make really rosy assumptions because we want the deal to work, because we've been looking for 6 months and nothing's worked. And that guy who's coaching you said, no, wait, that's not the right one. And you're like, well, I'm paying this money. I better close this deal. I'm going to do something. And then there's the other side of it where you get so conservative because you don't know that a deal will never work. And so you've got to play that balance. And I think the fastest way to do that is to actually ask the broker a very direct question that they can prove the answer to you with data. For instance, I had somebody send a LOI last week on a deal that I own, and they asked me for tax returns. I'm not going to give them tax returns. I'll give them bank statements. I won't give them tax returns. And so it's just a matter of really getting super clear about what is provable by a third-party document. I can make the spreadsheet. I can make the rent roll say whatever I wanted to say. I can make the trailing 12 say whatever I want to say. What I can't do is falsify how much money went into the bank account associated with the property.
Interesting. So bank statements are okay to ask for before LOI?
Most people wouldn't give them to you. You can ask for anything.
Yeah.
But
That's just
you can put it. I would put in the LOI. That's going to be a requirement of the PSA.
Yeah, part of DD. Yeah, okay.
And I would add to what Jerome is saying is not, our conversation was really comfortable. Like we had known each other for years, been through deals together. But if you're talking to someone else, it's not so much about challenging them. You're just telling them, hey, this is what your numbers say. This is what my numbers say. Help me understand how you're getting where you are. I just want a better understanding. You know, you can even, you know the market better than I do. You know that area, but I'm just not understanding how you get that. Show me where that comes from.
So in other words,
So-
you're just asking to show to ask asking him about his professional opinion. Therefore, you're giving him feeling he can give you his professional opinion about what he is. It sounds like
That's part of it, but like Jerome said, you want the data, right? So even what you'll see, even if you look at some of the pro formas, there's a lot of assumptions that are in the pro forma that you have to use a magnifying glass to actually see what they're assuming. And then you can talk through, well, how did you guys are making this assumption, what in this market are you seeing that proves that out? I'm just trying to get a better understanding so I can put together the best LOI possible so I can talk to my partners and kind of make this thing go. And so you're just trying to gather information, as much information as possible.
Go ahead, Ken.
Hey, for some really great, presentation stuff. I just wanted to sort of, emphasize or point out that Jerome did also a couple of great other things. Like he was asking the broker for like local recommendations for like the property manager and like lenders. And so like, that's how you build your team in a market. Like you could talk to 3 or 4 brokers and they all recommend the same property manager. Hey, that's probably a pretty proper manager to go to. If they know, like, because they usually have no vested interest, or sometimes they don't mind giving you recommendations for like property managers and lenders, and so they know like a good teams in there. That's how when I was doing my deal in Kansas City, I got a good lender recommendation and a good property manager recommendation. So don't be afraid when you're talking to brokers. Not only ask for the property, but ask for like team members in the market. Like, hey, who are they using for the insurance? Who are some of the local lenders that will lend on this asset, because not all lenders will lend on it. And then who will manage it, because not all property managers will have that. So I thought that was a good point. As they're going for terminology, that was a good like TTP as far as what are you using when you're talking to a broker.
Thanks for that, Kenneth. Lawrence, I know some people are going to start dropping. Lawrence is speaking at our conference. He's participating in a panel. I've got about 40 other speakers coming. James will be there. It is the most diverse real estate conference you will see in the country. So if you want to learn more about multifamily investing, if you want to get inspired and see that it's possible for you, I implore you to come on, spend the weekend with us. It's February 18th through the 20th. It's outside of business hours. And we really look to just inspire people, or actually the theme this year is called Dare to Dream. We want you to, if you want to get out of corporate, get out of corporate. If you want to build a huge portfolio and be the largest housing provider in your community, be that. If you just want a duplex, that's fine too. We've got speakers that you won't see anywhere else coming to share their authentic story. We got a course that you can buy if you want it, but nobody else is going to talk about any other product. So this isn't the cheap thing to get you to go buy the expensive thing. This is legitimately to inspire you to take things to the next level and to see people, regardless of your background, who look like you, who are doing the thing. And that's part of our mission. One thing that James and I committed to 3 years ago was really changing the face of what wealth looks like. So if you have any interest in going deeper on this, I think this is the best opportunity for you to get the exposure. People aren't going to come in and talk about 10,000 doors and how rich they are. They're going to talk about, this is how I grew up. Here's what I overcame in order to get here. And we're just trying to remove barriers so people feel like that they can do this too, because it's possible for everybody.
We have one other question. Sean?
Yeah, I guess, if we run out of time, that's all right. I can always email back, but just real quick, I mean, in evaluating deals, which are sort of, class B, class C type properties where there's not much information, how are you going about really high level analyzing those deals where there's lack of pro forma or otherwise financial information to make an educated decision?
Sean, my recommendation would be that you don't buy the deal. There's going to be a couple of challenges if you aren't in the space. One, it's going to be really hard to find a lender who's going to lend on the deal with no financials. That's the first thing. So if you're buying an asset and you can't buy it cash, you're going to be hard pressed to find somebody who's going to lend to you, because the whole point in buying these deals isn't because it's a piece of real estate. It's because it's a business with a proven track record. And so that net operating income over the past couple of years gives people as good of an indication as you can get that that type of financial performance will continue in the future, which makes them more willing to lend on the deal. The only other option that you have, if you decide I gotta have it, is buying it on a price per unit basis. The risk with that is you're treating it like a single family home, and they may be doing some things at their property that you won't be able to do, which means you won't be able to get the net operating income, which means that if you want to refi or you want to exit, everything on the backside of your deal is wrong. So what we use is the sales method, which is based on the net operating income, which requires historical operating data. And then we right size that, or we sanity check it against price per door or price per unit. Does that make sense?
Yep, it certainly does. And I thank you for that explanation. I appreciate it.
So before we end, right, I think everybody, please turn your cameras on. I'd like to take a screenshot. Thank you, Dolly. Wow, everybody's on camera now. Look at everybody's sweating.
Man, Mark Caesar in the building. We've been great.
No BS is here. Yes.
What's going on, gentlemen?
How you doing, man?
What's up, man?
Everybody, please, your cameras on. You can. Hey, Rachel.
Man, it's past his bedtime, Jasmine. Put that boy in the bed.
Everybody, smile, please. One more time, everybody, smile. Y'all off the hook tonight. Off the hook. I want to say thank you to Jerome and James for coming on tonight and doing a fantastic, awesome presentation tonight. And that wasn't me with the sound effects. That was Jerome. I gotta get a sound effects machine now. Get that pro. That roll. Is that a rolling pro, Jerome?
Roadcaster Pro, baby.
Roadcaster Pro, right? Roadcaster. I got a Roadcaster Pro now.
It might not be me. It might be James. James got one over there.
Wait a minute. I just want to say thank you to both guests tonight. Once again, Jerome and James. Thank you very much. I also want to thank all the attendees tonight for coming on and participating in your own quest for knowledge. Thank you.